Bogumil, it's great to see you.
Well, it's lovely to see you. We exchanged emails over, I want to say it's been at least a year, maybe two. And I know that you've listened to pretty much all of the episodes of Talking Billions. So I'm really flattered and I'm excited for this conversation today.
Yes, I mentioned you, Bogumil, in an article I wrote a few months ago rather, and it was my sources of wisdom. And I do have quite a few sources of wisdom that I go to, but I discovered this podcast and what I listen to every week when you publish something. I'm finding there is indeed a lot to learn here, and I don't know if there are too many Motley Fool members here in Australia that know of you. I did mention you in that article. Obviously, you're one of my sources of wisdom. But look, before we get into this, I'll introduce you first. Bogumil Baranowski, you're an investment advisor, you're a podcaster, you're a TEDx speaker, you're the author of 3 books and numerous investing related articles on the newsletter platform Substack. Now, I discovered Bogumil via his podcast, as we were talking about, and that's Talking Billions, and that focuses on long-term investing and the generation of wealth beyond one's own lifetime. You can correct me on that if I've missed part of that. But Australian Motley Fool members are typically experienced investors on one hand, but we also have a lot of investors that are new to investing, and which is why I was explaining my sources of wisdom, so to speak. And that's because I find your approach methodical, it's very calm, and it's realistic, and it resonates. So I need to share your wisdom today. That's why I'm having this chat. So I'm glad that you're along, that you're here, and I hope that our members would indeed benefit hearing from you, and I guess learning a whole new perspective on what it means to be a long-term investor. So Bogumil, we'll start. How are you? And I genuinely mean, how are you? How are you going?
I'm doing great. I've been looking forward to this conversation, and I appreciated all the emails you send me, and I always encourage my audience to write to me. And you might know by now that I see the podcasting part of what I do as a two-way street, where I obviously bring in guests and we talk about something that I'm passionate about and that they're passionate about. But then I'm always curious who is listening. And then I've heard so many wonderful stories of, individual episodes that made an impact on somebody. So I highly encourage people, the audience, the listeners, if you have an author or a podcaster or a writer or a Substack author, if you like what they write to them, because they do want to hear from you. And I've had many authors on the show, and they tell me each time that those emails from the audience, from followers, listeners, readers, they make their day. So if you have something on your mind and you want to share it. You know that I always read all the emails, even if I can respond in a short way, but I read all of them and you'll hear from me. So I always encourage people to reach out.
That's, I think, a very good thing. I think it's you're right about the feedback or getting some sort of response, because you don't want to just be talking to a void. I guess that you're not doing that, of course. And I understand too that you've got quite a few listeners of your podcast in Australia. Would that be correct?
It's true. And I know a few people that reached out from Australia that have been listening to the podcast. And I look at the statistics and I have to tell you that Australia usually holds up in the top 3, top 4, obviously with the US being number 1 and the UK. And then there's Australia. So somebody is listening, and I'm excited to have you all on board with me.
That's great. Now, Bogumil, you're an investor. Mm-hmm. You have clients who invest, and we have this concept called the stock market, or the share market, as we call it down here. One thing I don't know of is any billionaire chartists. I can certainly name quite a few founders of businesses that have subsequently become public companies and have done very well. So I guess when we talk about the stock market, people can start out, depending on what their sources of information are. You could become an investor, or you could become a trader of tickers or a follower of charts. That's such an easy thing to do, I would say. What led you to investing and really understanding that when you buy shares in a company that you really are a part owner of that business? What led you down that path instead of, say, betting on where the share price might be next week?
So you might know this story, but for the benefit of the audience, I was born in Poland and I went to schools around Europe. And at some point I was a student in Brussels and I gave a TEDx talk about that experience. Part of the talk is my visit to a bookstore in Brussels where I picked up a book by Peter Lynch, One Up on Wall Street. And at that point I studied economics, business, finance, accounting, political science. And I just wanted to make sense of the world. Poland was going through a massive transformation. I got to see the last decade of Cold War Poland and a massive growth expansion in the 90s. The stock market reopened after half a century and businesses were popping up and people were getting rich very quickly, but also a lot of money was lost very quickly. So I was just fascinated with what was going on. My teachers must have experienced the dot-com bubble because they were not really very happy, or they were not encouraging us to invest in the stock market. If anything, they were showing us case studies of dot-com stocks that blew up, and one of them was Amazon. And I had a professor that felt very strongly about Amazon, and Amazon went from $109 or $8 to $8. So it lost $100 per share, which is a 90-some% loss. And Bezos wrote at the time a shareholder letter with the first word being ouch. So that was the time. But I picked up that book by Peter Lynch in that small, tiny English language bookstore, and it opened my eyes to something I haven't seen before. And I think throughout life, we have those moments of revelation that one sentence, one idea can change the course of our life. And in that book, if I was to summarize it into a one observation, was that stocks are small pieces of businesses. And that very simple, very straightforward idea that to you and I today, and maybe the majority of your audience, is as obvious as anything else in life, to me, it was a revelation. So I saw the stock market and the stocks you get to buy not as a ticker, not as a price that moves up and down, but as a participation, an ownership in a business. And it really spoke to me, not in the sense that I thought I'll beat the market, I'll become the richest person in the world. No, it was more in the sense that I could figure this out. I could figure out which businesses are worth holding. I started to understand that it's very important how much you're going to pay for those businesses. And from that book, I started to appreciate that I might have to hold them for a while. And I discovered Buffett soon after that. Actually, Buffett is mentioned in that book. But to me, Buffett was just the CEO of a large U.S. company. I couldn't really tell the difference between Buffett and Walton or anybody else that runs a massive, GE or any other company. I didn't really understand that Berkshire is a one-of-a-kind company. But that really opened my eyes to a whole different idea. You brought up the concept of a share market, stock market. When you think about it, if you'd like to participate in the success of businesses around you, right? So let's say that you walk home and there's a very successful coffee shop and there's always a line and they have cookies and cupcakes and whatever else. And you say, I'd love to become an owner of this business, a part owner. So you knock on the door, you see the manager, they introduce you to the owner and you say, here is the money, I'd like to buy 10% of the business. You know what they will say? No, thank you. I'm running it with my daughter and with my sister, with my brother. This is our family business. You walk over to the gas station, they'll tell you the same thing. And the store and whatever else is in your neighborhood. So usually throughout most of history and throughout most of those business opportunities that you can think of, there is an owner and they have no interest in having an outside shareholder, right? The stock market is unique. It's a market, first of all, right? So it's a place where you can go and buy participations, ownership, however you want to call it, a share of a business. And those businesses make those shares available to you and I. And what blew my mind was that it doesn't really matter if I have $1 billion or if I have $100. I can become a shareholder in some of the biggest and greatest businesses out there. And add on top of it, I'll be treated fairly and equally as any other shareholder. If you pull up a U.S. company proxy, and I'm sure it applies in other countries as well, it says specifically, proxy is one of the filings, right? You have the 10K, 10Q, you have proxies every year. It says in so many of them outright that you have the same economic rights per share all of you. That's a fairly unique idea, and we're building on a history of the joint stock company invented a few hundred years ago, the stock market as a place to exchange ownership of businesses a few hundred years. And here we are, today, benefiting from a long, long history of a certain setup that allows all of us to participate in the ownership of businesses out there without knowing anybody. It doesn't matter how old you are, how young you are, what's your gender, who you know, where you came from. If you have $100, you can go ahead and become a partner in so many wonderful businesses. So that's where I came from.
It's a very good place to be, I think, having that mindset. I think the problem with investing in the public market, especially for people starting out, is just the rapid daily movement in share prices. And a lot of people will equate a falling share price, for example, to risk, to danger. I'm losing capital. But what I write about at the Motley Fool is obviously that's part of the nature of the market. But what we need to do then is to focus on the business fundamentals and let that performance of the business come through and show its bona fides, whether it's good or bad over time. But hopefully we're smart enough to pick, on the whole, good businesses that can grow with high returns on capital. And if we can do that, then we just need to wait out those variations in share price, so that when I'm writing, I say to people, look, this could be a 5-year investment as a very minimum. Otherwise, there is a risk that you could lose capital if you need to sell at, say, 3 years. Now, on your website, this is what is very interesting for me, is that I talk about the long term, but you seem to take that to another level. So I'll just quote you. I'll just quote you from the website, which I found quite interesting. That's blueinfinituscapital.com. And you say, we manage stock portfolios for wealth creators with patient capital and an infinite investment horizon. As stewards of capital, our mission is to keep and grow fortunes entrusted to us. We're here to expand the horizons of wealth, viewing investing as an infinite pursuit that builds a legacy that spans generations. We work with families and individuals who aspire to compound wealth through disciplined, thoughtful investments in durable, quality companies while giving money meaning. And I really like that little passage, because you talk about the infinite investment horizon. And to me, surely that implies that investing can be beyond one's own lifetime. And I think that's really something, isn't it?
It is. It is. Where to even start? I feel like let's start in the middle. So There's a wonderful book called Infinite and Finite Games, written by James Cars. And James Cars was a professional athlete. And he made this remark. He gave a wonderful interview with a good friend, Sean Delaney. And it was one of his last interviews before he passed away, that I highly recommend to look up Sean and James Cars' interview. But the idea in the book was, and he's writing and teaching, that there are two kinds of games that we can play in life if you actually pause and look around. And we're used to seeing finite games. A game of chess, there are clear rules, and there's an end to the game. In some games, we even have a time limit. I'm thinking of soccer or many others. But there's a winner, there's a loser, there are clear rules, and the game ends. Now, there are also games that we play for the joy of playing. Friendship is such a game, right? You want to do everything possible to have that friendship continue. Marriage, if you were to call it a game, hopefully you're not thinking of it as you're winning or you're losing. You want it to perpetuate, right? So you realize that there are certain things in life that bring you joy because you get to continue to play. And you have to figure out a way to be able to stay, to stick around, right? And investing in so many ways is presented as a finite game, where there's a winner, there's a loser, there's the best manager of the month, there's the best asset class of the year, and so on. And obviously, it's entertaining to look at it that way. But if you think of wealth as something that can compound, grow over pretty much an open-ended period of time. And in my professional life, I work with families that have had multi-generational wealth for sometimes 100 or 100 more years, 150 years in some cases. I've had the experience of working with families that created the beginning of their capital, their fortune, when Beethoven was writing his symphonies, which is mind-boggling. Like, how can you even imagine that period of time of compounding that you have if you can look at it that way? And they still think in terms of the next 100 years at least, so 4 generations. But if you have such an open runway, investing feels like a completely different experience. You can take your time, you can choose your investments in a different way, but you're in no rush, and you can make completely different, decisions. When people think of investing as a very competitive field, I always ask, what's your time horizon? Because if you and I today were to decide if the market, whichever one, let's pick the US market, is it going to close up or down? We know, you and I, that a chance of me or you being right is about 50-50. That's what the statistics tell you, right? But if you extend that horizon, whether it's a decade or 2 decades, your odds start to improve in the desirable direction, as in you're going to make money. The other thing that happens is if you can take a longer view, there are actually fewer people left participating in that game, right? The game of trying to guess if the next quarter will be better than expected or worse than expected and how the market will react, that game is very competitive. But if you go into a room and you ask questions about the next 3 or 5 year vision, and I've done it. I actually sat with managements, and I was in a room with a bunch of analysts from different firms at some point of my life. And I would ask them questions about the next 5 years, not even 100 years. They would pull me aside, Ed. I would say, stay. You were the only one that didn't ask about the next quarter. You were the only one that didn't ask about the penny or 2 pennies that we missed. You asked about the 5-year vision, supply chain, new product line, and all those things, and nobody asks. So you might realize that you're the only person in the room. So in this highly competitive industry, you immediately remove the majority of your competition if you can create that kind of infinite investment horizon. And the wealth, if you look at it, I have this, dreamy aspiration that each generation should not start with 0. And I talk about it quite a bit. How when you think of the acquisition of knowledge, like you and I are building on top of giants that came before us, right? When we go to school, we pick up, physics and Newton and everything that happened in between, and all the theories and math and numbers and language and books, and even how stories are structured and plays are written. So we're building on thousands and thousands of years of history. Now, when it comes to wealth, people not only live paycheck to paycheck, but each generation starts with 0. So I have this aspiration. What can we do to have more families start with something? Because it gives, and I've seen it with my clients, it gives them the freedom, the choices, the peace of mind when they know that there's something there waiting for them. They can take a gap year. They can choose a career that's maybe less financially rewarding, but rewarding in other ways. I mean, there are 1,000 ways that kind of gift between generations can create a lot of good, especially if it's given with warm hands. I like this idea of a gift with warm hands, but let me pause here. But that's how I look at it.
That's a nice way of putting it. I don't think many people think that way. And I know that many members who are new to investing, who join the Motley Fool, hopefully not. We don't want to see people looking for the quick buck, the quick return. We like the slow return. But I do think it's a nice thought or a thought experiment for someone, say, starting out in their 20s, investing and buying shares for the first time.
Mm-hmm.
If I could have my way, I'd actually prevent the scorecard on our services from showing returns for the first 12 months, because it's just noise in that first 12 months. It's not to say that I'd be hiding from the returns, but if a stock pick, say, was recommended in March and it goes up 50% in 2 months, it's not something I'm actually crying about, because it means there's less value on offer for a start. Whilst it's a good return, it's not something I expect, of course. Mm-hmm. And likewise, if something falls 30% after 2 months, it's not something I necessarily like to see, but it's just part of the reality of investing. But my question here on the next point is, you're dealing with clients who are doing exactly that. They are investing for the next generation.
Mm-hmm.
I'm quite intrigued that you've got a client there who's got a business that goes back to the time of Beethoven, for instance. That's quite
Mm-hmm.
interesting. Is that the thought like your clients today, though? Are they still thinking that? Are they thinking the next 50 to 100 years and beyond that for their businesses and
The
in their portfolios?
the short answer is that the clients I've worked with and I have the pleasure of serving these days, they do. And there are people out there that think that way. And it's fascinating because I had a longer conversation with somebody about it. And I think if you grew up in a family that talks about those values and talks about a certain lifestyle, and I'll bring up Byron Tully, who was a guest on the show. He wrote a book, Old Money Rules, and he comes from a family that has had wealth for 4 or 5 generations. He openly talks about it in the book, and he was a guest on the show twice, and I got to have lunch with him in Paris in a small coffee shop and cafe, and I really enjoyed spending time with him and learning from him. But he basically points out what I see that rhymes with a lot of my clients is that you have to find a way to live within the confines of your wealth. And I had Fraser Rice on the show, who wrote a wonderful book about family wealth that I'm sure you might remember. But if you grow up with certain rules and principles, it sets you up for a different way of thinking about wealth in a more empowered way, where you see it as a tool or something that can serve you in many different ways. And if there is a family fortune to be discussed, I think of it as almost a miracle. I would call it a miracle that there is even a fortune to talk about, and it's been around for a while. And if the family openly communicates on that topic, and in my book Money Life Family, one of the big parts is involving the whole family at some point and engaging everybody in a conversation so that everybody knows that they will be responsible in some way for that. But to answer your question, there are people that think that way, and they take advantage of what's going on, and somehow they find a way to be immune in the world that's very short-term focused and very impatient. And if anything, this approach that they practice, that I subscribe to, even if that approach doesn't really change, although it evolves in many different ways because the world keeps on evolving, the world around us speeds up so much that we get to stand out even more. And I see and I feel a certain, peace and calm and this unrushed approach around money. And it's very, very empowering to think that way. You might know, and we shared that story. I shared that story with you at some point that, I grew up in Poland, and Poland as a location, and I bring up in Money Life Family the location as an important thing for your wealth. I'm talking about financial wealth, but also your physical presence. But Poland was not, and that part of the world was not a good place to preserve wealth. There were periods when you could create wealth, and there are stories in my family of certain affluence a long time ago. But I always felt like, because of the change and the conflicts and the war and 50 years of communism, there was no way you could hold on to anything meaningful. It was either, burned down, stolen, or confiscated. US, on the other hand, had a remarkable experience, and maybe Australia to a large extent too, that you had 200 years or maybe more by now of fairly stable system with a democracy, and also a system that favors acquisition of wealth. There's a beautiful interview with the late Lewis Lapham. Lewis Lapham was the editor of Harvard Magazine, and it's an interview with Joe Riley, who will be a guest on my show as well, who is fascinated with the family wealth topic. But Lewis Lapham grew up in a family with multi-generational wealth, but his generation, he passed away not long ago, he didn't have enough not to work, so he ended up working, but he grew up with the old money rules and thinking. But he made a point in that interview how the US was built to be a place where you acquire and keep wealth, which is very important because there are many places and many times around the whole world as such where you could create wealth. But keeping that wealth can be a very different experience. Getting rich and staying rich. You brought up Morgan Housel when we spoke earlier, but Morgan Housel had a beautiful article about it, how it's two different experiences. And when you can shift that mindset, once you're thinking about keeping the wealth will continue to grow, right? It's you have to find a different set of circumstances that will allow you to preserve it.
That's right. It's interesting. Through the Motley Fool here in Australia, we have a platinum service. So members can basically pay a bit more money to us, but they'll get access to all of our services, online events, and so on. And there was a gentleman I've met who is basically in a situation like this. He's managing intergenerational wealth. I think he's in his 60s. He's got 3 adult children who have somewhat an interest in investing, but not necessarily a strong interest. I guess what I'm asking here is what happens to a current or perhaps younger generations who are still coming through that don't necessarily have the same interest or capability to want to manage large sums of money. Have you found that to be a problem with some or all of your clients? So yes, there's a creation of wealth been built up through the ages. But let's just say today, what happens if you've got, say, a son or a daughter who simply doesn't want to manage money or has no interest in it, and they don't want to be a part of the family business, or they don't want to watch that portfolio? They'd rather be traveling or focusing on studies or doing something else. Have you found clients in this situation? And if so, what do you do about that, do you think? How can you encourage the younger generation to take an interest?
No, I think it's a brilliant question, and there are many layers to it. So I have a good friend who is a mentor to me. His name is Jay Hughes, and he has advised families more from the legal perspective, but not only, some of the most affluent families around the world. And he shared with me something in one of the episodes early on of Talking Billions. It's actually with James Hughes. And he told me that when a family passes on the wealth and people think of the financial capital, they also pass on a whole circle of people that help that capital stay around, grow, perpetuate, whether it's the accountant or the lawyer or the investment advisor and their trustees and so on. But he says, Bogumil, sometimes the people that family assembled to help them on this journey is they're as valuable, if not more, as the financial capital itself, which I found to be a fascinating observation. So the next generation inherits not just the amount, but also the people. And they get the benefit of having that group of people create a certain bridge between generations. And they can benefit from their help. Now, over the years, I enjoyed working with the younger generation of the clients that I served at different points in time. And I always thought that it was fascinating that families would choose to send my way the 19-year-olds, 20-year-olds, even though they knew that most likely they will not choose the investment profession as their profession, but they wanted them to spend the summer with me. And throughout that summer, they would ask questions, they would observe, they would see things. And over the years, 10 years later, 20 years later, I've been doing it for 20 years. They come back and we have conversations, and they became friends, and they're part of my world in many ways. But I feel like because of that short experience, they feel empowered to ask the right questions. To answer your question, one thing is that the family can already have the right people around to help them in this process, so that the next generation doesn't have to do it all on their own. But in general, when you're facing substantial wealth, and usually it's sudden wealth, an inheritance or a sale of a business, what I would highlight is that you don't have to do it on your own. There are people that live it, breathe it, day in and day out. And they've seen 1,000 cases and 1,000 stories. And they wake up thinking about it like I do, and they fall asleep thinking about it like I do. You can lean on somebody that has been doing it their whole life, and they intend to be doing it for many decades to come. When you need a tax help with your tax returns, I go to somebody who I really like and I really respect, and they have all the answers for me. I don't have to do it. There was a time, Ed, when I was doing my own tax returns. I don't do it anymore. And I have a doctor, and I have a dentist, and I have a lawyer, and I have different people in my life that I can lean on. This is yet one more thing, one more service, one more guidance that you can have in your life. So find somebody that you can trust, find somebody that you like, and invite them to be a part of your journey. And introduce them to your kids, introduce them to your grandkids, because that person at some point will be a bridge between generations. I'll say one last thing, Ed. I've been in rooms where I might be the only one that can say what Grandpa would say that's no longer with us in the room. And it gives me goosebumps, because I feel like the family looks at me and says, what would Dad say? Or what would Grandpa say? And I spend sometimes, in some cases, so many hours with the previous generation that I can be in a position to say, this is what they would like us to do. So being that kind of, bridge and voice that's neutral, because I'm outside of the family, I think can play a huge role, even if the next generation doesn't want to have their hands on and participation in it. Having that kind of help. There are people like that can help. And you find somebody with a obsession and a true calling, and somebody that cares, and I think you'll prepare your family in a beautiful way.
Yeah, and I can tell with yourself, it's not just a job; it is more of a calling for you, isn't it?
It really is, and you might know that I grew up in a household with two doctors, two physicians, and I watched them growing up, and I knew they were not doing it for the money, and for many reasons. But my first 10 years of my life, it was Cold War Poland, and doctors were paid less than coal miners. It was just to make a point under communism that educated people shouldn't be paid more than manual labor. That was one of the principles of the communist rule. So I knew that my parents didn't go to medical school and spend decades acquiring their knowledge to get rich, because being a doctor you would make more money as an electrician in Poland in the 1980s. So I knew it was their calling. There was nothing else they could do. When you find somebody that's doing something because they can't do anything else, he has to be a writer, he has to be a musician, a performer, or she has to be a teacher. If you find somebody like that, they're precious people in your life. So they're not doing it for the money, it's their obsession. And I want to emphasize the last part is that they actually care. And I'm sure you've had those interactions with people in your life. You go to see a doctor and you assume that they're competent. You know they're competent, but you still want them to hold your hand and say, Ed, I'll be here. You go into a surgery and they say, we've talked about it. I know everything there is to know. They know your name. They know who you are. They've seen you many times. They earned your trust. And they'll be there in the room when you wake up and walk you through what's next. That's the kind of feeling you want to have when it comes to money as well.
Absolutely. I think too, when you've got that safety, or you've got that support there, then learning can become a real thing. Because I think the magic of investing for me is that whilst I can't possibly have careers in so many wonderful industries, I'm working here and I can only do this. I'm not a doctor, I'm not an engineer. But what I can do is I can at least send my savings in those directions. So that's the benefit of share market investing for me. The thing I say to my boys, they're 12 and 14, is look, over time, right now, they're not at that point where they really understand investing. They do have a few shares that I've bought for them, my wife and I. But I do want them to understand that I want you to have two careers in life. First of all, the first career is to be what you want to be. And the second career is to actually look after your own finances and to understand money and to understand investing, because I think it is so important. And I mentioned savings, sending savings in those directions. So I just wanted to reference Tony Deaton. He's the chairman of Edelweiss Holdings.
Mm-hmm.
And there's a very, very good video on YouTube that goes for 2.5 hours or so. And
Mm-hmm.
I do like the fact that he prefers the term savings over capital, for example, because
Mm-hmm.
it does represent either an individual's or a family's a lifetime of or what they've achieved through hard work and being careful with their money. But coming back to investing, keeping
Mm-hmm.
the interest going, I can invest in software, luxury goods,
Mm-hmm.
biotechnology, battery cooling technology, ratings agencies. There's so many ways that you can go, and none of those are necessarily good or bad by themselves. You always have to look at the underlying company or companies'
Right.
high returns on capital and so on. But it's it's fascinating that you can actually go along and invest in high quality companies in some of those industries.
Mm-hmm.
And I guess that's why here at the Motley Fool and yourself as well, we're very big on education. We like to ensure that members are learning about their investments as much as making money, because I don't think there's any point in buying something, seeing it rise 30%, pays out 5% in dividends. But so what if you don't know
Mm-hmm.
what you're actually investing in? So I think there's a lot of factors to consider. And look, I just wanted to make a mention. Tom Gardner, he's the Motley Fool CEO. He likes to go to the leaders of industries. I think he's mentioned the trade desk as one company where he could go to the CEO there and say, look, I can go here and get an expert position or understanding of programmatic advertising
Mm-hmm.
just through listening to that particular CEO or some other CEO in another field. So I think it's all about learning as much as possible. And if we do learn, then the engagement is higher. And I think if the engagement is higher, then there's hopefully a smaller chance that there will be fewer mistakes in the future, because we are going to make mistakes when it comes to investing. And so I'm trusting too that your clients are as interested and engaged in what they invest in as we are. I'm assuming that is the case, Bogumil.
No, it's a great question. So I look at it this way, that the way I set up the firm, and that's why the way I practiced it for the last 20 years, is that I know the clients and I know the businesses I own for the clients. And I think in the industry in general, there are many degrees of separation. You talk to a relationship manager that talks to the next manager, that talks to the portfolio manager, that talks to the analyst. And I feel like for me, it's very important that I'm so close to the actual individuals on both sides. So I know who's running the businesses. I know whose money I manage. You brought up a couple of things that are really interesting. I wrote an article and I called it the three escape velocities of money. And you might have read the article. But to me, when it comes to wealth, and we talk about education, there's a certain point when you have to realize that you have to spend less than you earn. There's no way around it. I haven't found a way around. So you have to reach a point where you realize, and I talked to somebody the other day when they said that their father would save first and spend second. So he would decide that this month I'm putting away this much and I'm going to live on the second, on whatever is left. And I thought it's such a brilliant, such a simple idea, but there's no way around it. And I feel like there are a lot of stories about shortcuts and winning and quick wins. If you start with the simple idea, and you brought up Tony Deedon, and he talks about the wealth as savings, and Tony is a good friend, and I greatly admire what he does and how he manages money and how he thinks about wealth, and most of all, how much respect he has for the money that he manages. I just spoke earlier today with somebody that inherited wealth, and he told me something that made me choke up for a second, because those things get emotional. And he said, I know what my dad went through to have this kind of money. And he says that I have great respect for this money. And that's what Tony Deedon teaches us in the Grant Williams interview that you talk about, that I highly recommend for your audience to explore. And if you have that kind of respect for that money, it's a whole different game. Now, coming back to the escape velocities, just like a rocket leaving the planet. Now, once you realize that the capital that you saved is earning you as much as you earn on your own with a paycheck, it's the second velocity. That's how I frame it for my own benefit. It's not, science. That's how I explain it. But once you realize that the capital earns for you through appreciation and dividends as much as you do working, selling your services, selling your skill, selling your time, there's something that changes in our minds, because this is the moment where you realize there's two of me, right? There's the one that goes up and shows up for work, and then there's the capital that replicates.
Absolutely.
It's almost like your parents telling you, go earn $10 and I'll give you $10, right? And I think that's the moment that you realize my capital could eventually replace me. And this is the third velocity, where you have so much capital saved, and it all is a function of how much you spend per year, but that you have enough saved that capital basically covers your annual expenses and more, and for many, many years to come. You know, different formulas. People say 4% rule, 25 years, however way you want to look at it. But it's the moment where work truly becomes optional. And many of my clients, for various reasons, through inherited wealth and creative wealth and both, reach a point where work as such becomes optional. It's a fascinating idea where, and I ask some people sometimes in some conversations, what would you do if money was not an issue? If you could do absolutely anything you want? To be in that position is really empowering. You may choose to do what you do, and that's absolutely fine. You're the lucky one, and I feel like I'm the lucky one because I would do what I do even if I wasn't paid to do it. I'm absolutely fascinated with this pursuit, but it's just to position it properly. And I'm going to say one last thing. You said, business. I don't want people to get lost when they look at the stock market and they see the tickers and the prices and the index and that index. What are we really trying to do? We're trying to become owners of a business. What is a business? Business is some sort of an organized operation that provides a service or a good and arranges it in a way where they can make money doing it. End of story, right? It starts with a coffee shop and ends with, well, let's take on Starbucks, a global chain of coffee shops around the world. The physics of money here are the same. And the logic is the same, right? So on every cup of coffee, you want to make a bit of money. So it makes sense for you to open the next store and the next store and the next store. And I'd love to become a business owner. How can I do it? I can walk around my town and ask who will sell me a piece of their business. Many people will say no. Or I can go to the stock market and become an owner. You brought up before something that I don't want to miss. You talked about the daily price quote. And you can see this as your enemy, because you look at it and it will have an impact on you. The fact that your net worth, how much money you have, goes up and down every day. It will have an impact on you, right? But if you look beyond it and you realize I own the 20 or 30 or 5 or however many businesses out there, I know what they do. This one is selling coffee. This one is making planes. This one is, I don't know, providing hospitality, rooms, hotels, whatever it is. But you have a collection of businesses and you look at their fundamentals, how well they're doing. Are they making more money than the year before? And what are they doing to improve their business going forward? The price becomes secondary. I'll mention Tony once again. In that beautiful interview, he says that he talks to one of the founders, the owners of the businesses that he owns. And he asked him, that CEO asked him, where's the stock price these days? I don't know if you remember that part of the interview, but he is pointing out that the owner of that business sees himself as the owner of the business. He doesn't even know where the stock price is today. He's asking Tony, one of the shareholders, where's the stock price these days? That's the mindset you want to have. You want to own businesses where you don't have to check the stock price. Buffett jokingly says, but I think he's serious about it, if the market was closed for a year or two, which actually happened at different points in time that the market was closed for a period of time, would you be okay holding this? I think it's a wonderful test of if you're a true business owner, investor in that sense, or if you're still leaning towards the speculator side. That's how I look at it.
It's funny. I've read the 3 of your books. In your book, Outsmarting the Crowd, you wrote, there is no room for emotion or excitement in investing. And yet, because of the job I'm doing, I have to look at share prices on a regular basis. I still feel pangs of discomfort or sometimes horror when share prices fall rapidly. We saw that in March of 2020. I do remember the end of 2018, the last quarter. There was the GFC. global financial crisis, as we call it. And there are other periods in time. But the thing is, I've trained myself to, and this is, I think, very important, I have reacted in the past, but to not react to those share price falls, especially when they're market wide. So I write extensively about that, and I basically suggest to members, look, don't, or try to ignore the market noise, especially in times when there are rapid drawdowns or a spike in volatility. But it's my view that if you think of it this way, volatility is certainly a function of the number of times that you check your share price. Now, we've got these phones in our pocket every day. There's an app. We have a share price. I can see it. Oh, look, it's up. Oh, it's down. I know that that's going to happen anyway, and it's happening today. I don't know if the market's up or down today. It doesn't really matter. But I think if you're going to examine a share price, say, once every 3 months or every 6 months, or maybe in line with reporting, you can get a better gauge of, yes, this is where the share price is, but I also know where the business is at as well. And even a quarterly report, I don't think is that important in the long run. So perhaps semi-annually or annually is a good time to look at that. But that's an aside. Have you had to actually train many of your clients to not react when there are tantrums from the market, when you see big drawdowns? Or are your clients, are they okay because of the guidance you give them and the hand-holding that you say, that you talk to them and you provide to them?
I have to say that I've been very fortunate and blessed on that front. And I think part of it is my ongoing communication. And when I onboard new clients, I take my time and I try to give both sides a chance to get to know each other. And I do know that there are a lot of people with my kind of time horizon and my client's kind of time horizon. And there are those where clearly we differ on that front. And I have all respect. I think there are very many different ways to go about it. And I'm very open about how I look at investing. I mean, it's right there on page 1, as you read to us before, how I look at the investment horizon. There are no surprises there. And no false promises of any short-term gains. But it's a long-term game of compounding and perpetuating wealth. Now, that ongoing communication, I think, prepares my clients. And I'll tell you a story. And we had some market jitters this summer. We're talking 2024. And I'm sure they would apply any other year whenever you listen to this episode. And the day flew by, and I was looking at the market, and I don't check on it, but I noticed that the market is down that day, and it's been another day of corrections. And I felt like I will write a short email to my clients. And I will share with them how I feel about it, which is no surprise. We have those corrections now and then. These are the things we've been buying for those reasons. And I just wanted to say hello. I'm watching. I noticed. I see it. If you'd like to talk more about it, I'm available. And Ed, within minutes, I got emails back saying, no, it's fine. We've been through this before. We know what you're up to. Keep at it. No need for a phone call. Now, March 2020 that you brought up, which was pretty dramatic, I have to say.
It was.
And I was in New York City, and you can't escape the news. So I remember leaving the office, and it was a little bit either early March or late February, and we already have some corrections, like initial jitters in the market. And I remember walking past one of the bus stops in New York, and they have those displays these days, screens. And I took a photo. I have that photo somewhere where it said the worst day for the market since, or in that many months. And this was just the beginning of the 30-some% correction in the major indices in the US. And I took a photo because I thought, I think there's more to come. I just didn't know how much. But anyways, by the time the worst of the worst was happening, we're in lockdowns in New York, and my wife and I kind of had a self-imposed lockdown. We decided not to go to the office. I had a midtown office. I was on the train, the subway, and I thought, I think it's wise for us to stay home and see where this goes. And we had friends in the north of Italy that I spoke to, and I was very close to what was going on around the world. And I thought, if they have that virus in Milan, it has to be in New York, because New York has 1,000 flights with all possible places you can think of. So there's no way that this virus is not in New York. I didn't know enough, but I thought it would be wise to stay home. But I was taking calls from home, and it was about mid-March, the worst of it. And clients would call me and tell me, I just wanted to hear your voice. So sometimes I played that role of, the steady captain that's at the helm, no matter what's going on. And I sail boats, and I've been through squalls sailing. And there's a moment where for 5 minutes, it feels like the world is about to end. There's wind coming through, and it's raining. You can't see anything, and the boat is dancing on those waves. So for 5 minutes, it feels like it's the end of the world. And you need that captain at the helm that will say, we'll keep at it. And in those moments, I make myself as available. I was writing every week at the time, not any specific stock commentary, but general, processing what I'm learning, what's going on, so that clients are on top of it. And if they wanted to speak, I made myself available for those conversations. But preparing them for it, having those conversations, having that kind of communication, so when the time comes, they're ready for it. And I think we learn a lot about each other as on the client advisor side here of the interaction in those moments. And I mentioned how when I onboard a client, I don't look forward to it, but I know there will be a time when we will go from some sort of a correction. And this is really the time when we get to know each other, because we can hypothesize about what's your risk tolerance, how would you feel if the account was down 10% or 20%. But you and I know that nothing replaces the actual moment when the account is down 20%, and you have to get on the phone and you have to talk about it. And they don't really teach you that at school at all. It's you talk about stock valuation and accounting and balance sheets and all those things. How do you manage a conversation with another human being, going back to Tony's point, their lifetime of savings on paper right now, on the statement they're seeing or on the phone they're looking at, is down a substantial percent. It's a paper loss, however you want to look at it, but there's an emotional experience that they're facing, and you have to be available and present with them and walk them through it. And the best thing we can do is stay invested and add to the investments we've made in the quality businesses that we've had, and not panic. I think Peter Lynch made the point that more money was lost because people got scared out of the market in any other way. And I think there's some truth to it. And I think somebody did a study, and I don't know if it was Peter Lynch's fund, that the actual average shareholder in the fund had much more disappointing results than the fund itself, because people would buy and sell at the wrong time. That's why you might need that helping hand, that kind of guidance that will walk you through it, through the hardest times. There's a beautiful author, and that I really like. His name is Nick Murray, and I was actually introduced by one of my listeners to Nick Murray, somebody based in the UK. Nick Murray makes a point that 2 points that we've been talking about today. One is that over the long run, you want to be an owner of businesses through the stock market, an equity owner. And the second point he makes, you might not be able to do it all on your own, and it's okay. And there are people out there that you can trust, you can lean on, that will help you. And Nick Murray makes a point that in those moments where people panic, you need a professional in many cases to walk you through it. There are seemingly easy years when everybody is investing on their own and then buying stocks, but then there are times when you can really make a huge difference. And I feel like I played that role in the life of my clients in March of 2020, and I have no doubt that there will be other times when I'll have to step up and play that role again.
Yeah, there's reminds me of a tweet from what they used to call them tweets on X. There was a message from Morgan Housel again, just reminding people of the volatility of markets, and it was very simple. It was pretending to take the position of a long-term investor, and he was saying, I'm a long-term investor. And then that would repeat, I'm a long-term investor. Then the market crash comes, and then he writes fetal position as they call up on a ball and try to avoid what's been happening to them. So I think it's best to not be in that position, actually, to prepare yourself, because we do know markets are going to wax and wane. There's going to be crashes in the future. There's going to be corrections. whatever you want to talk about. Look, I'm conscious of time, so I'm just going to wrap this up with a few last questions.
Tell me.
You can be as long or as brief as you wish. What's the one thing that all investors should know, Bogumil?
Oh, wow. That's a great question. What they should know and that I assume they don't know. I feel like you brought it up on so many occasions throughout this conversation, but I like to remind people that when you're investing, you own businesses, and it should be engraved somewhere. And if you have that conviction that you actually own businesses, I think it will get you through the times you brought up, through the hard times, and it will allow you to benefit from the long term, upside that best businesses can offer. But don't forget that you own businesses. I think that would be the way to put it.
Sounds very wise to me. Okay, my last few questions. I'm going to borrow this question from a British motorsport journalist, Will Buxton. He writes for
Uh-huh.
Formula One, and he's got his own guests, and he asks this question: who would you most like to be stuck in a lift with, either alive or dead?
You brought up Tony Deedon, and I'm a huge fan of Tony. I spent some time with him in Zurich. We had a long day once at some point where I met him in the morning. Then I had lunch with him and his team, and then we ended up on the roof of his office, and it was a beautiful summer day. I wouldn't mind spending a few more hours with Tony one on one. I'm actually talking to him soon and catching up with him, but if we had an elevator run, a trip, and we were stuck in the
Mm.
elevator together, I'd have a lot to talk about with Tony. I feel like we never run out of topics, and I find him as a lifelong inspiration, and I highly recommend the interview with Grant Williams that you brought up to
Mm.
anybody listening. So, Tony.
Yeah, I've watched that two or three times myself. Yeah, I can imagine that would be a very long and enjoyable conversation. I'm
I
going to
hope
ask.
I get
Oh,
to bring a microphone with me on that
yes, please
elevator
do.
ride.
If
Tony
you
is a
do,
very private person, but if I
he
could
is.
have a
Yeah,
microphone and he would be okay with it, I'd love the audience to enjoy what I got to talk to Tony on that elevator ride.
absolutely. My second last question. This is something that you ask your own guests. What's your own definition of success?
I love that question. I close my conversations with that question because I've heard so many different versions of it, and I always think of my own. I feel like for sure it's not a destination. It's an ongoing experience. And it's that feeling that every day you show up and you do exactly what you're supposed to do. And you're useful, you add value to people, and you have fun with it. And I feel very, very fortunate and grateful and blessed that I got to find a calling in my life. I saw my parents find their calling. I mentioned my grandma, who in her later career managed a senior citizen home. She turned around one and then built another one, public service senior citizen home, and I saw the passion she had for helping people, and I feel like I play that role for the families I work with, and I'm very grateful I get to do it. I feel inspired and challenged, and I continue to learn with them and through them, through their experience. Every new client is a new story, a new journey, and I see it as an open-ended, infinite game in itself, what I'm doing. So I'm looking forward for all the decades to come. And I'm thinking of Charlie Munger that we lost last year, that lived to almost
Mm,
100. I'm 44 and I've been in the business 20 years, but Charlie was just warming up when he was my age. He had a lot
yeah,
more to
yeah.
offer. I feel like people say that he peaked at 99, and I listened when he passed away that week. I downloaded the last few interviews that he gave, and I listened to them, and I found them very inspiring. And he had so much to share and to offer, and he was channeling Ben Graham, and he shared in some of those interviews how Ben Graham was there to teach. People think of Ben Graham as the father of value investing and somebody that had a successful investment practice and so on. But most of all, he was a teacher, and he loved to study and to teach. And I recently interviewed, and it's an upcoming episode. By the time this one airs, it might be already out. Chris Begg, who teaches the original Ben Graham's class at Columbia University, the security analysis course. And we talked about Ben Graham and how he would bring in philosophy and all the other topics. So he was doing the original lattice work of mental models, introducing students not just to the balance sheet, but to a bigger philosophy. And we had a wonderful conversation with Chris about eternity, because Graham would invite students to the class and he would say, we're going to start with Spinoza and how we should look at everything through the lens of eternity. Eternity, infinity, different ways of looking at it, but basically of a wide scope through time and space and fields, the exploration of investing, not just picking stocks that go up, but seeing it in a bigger context. And I hope that this conversation introduced your audience to yet another context of what wealth, capital, savings can be and how they can serve. I call it, giving that money meaning. I can see how the money that I'm responsible for has a huge importance, meaning in the lives of the clients that I serve. So for me, success is being able to show up every day, have fun with it, have fascinating conversations like the one we're having today, and continue to learn. And I love the fact that there's no end to it. There's no one last book I have to read and I'm done. There's no one last stock I have to research and I'm going to be done. I know that this is something that will go on and on and on. And Charlie was as busy as ever in those last few years. I'll mention one last thing that I shared with somebody, how I think of Charlie, those last few days. There are books that were probably next to his desk and his armchair that we've seen in some of the video interviews that remained open. He started all those books, right? Can you imagine? What are those books that he will never finish? But it's the exciting thing that there was so much he was still trying to learn, embrace, understand, and question, and so on. So I'd like to have a life that rhymes with that idea. Being useful to others, have fun with it, and never stop learning.
Because it's certainly it's a common saying, isn't it, that life is very short. And I think we see that as we move through the decades. And we're talking about 2025 now coming up. It's not too far away.
Time flies, but let's have fun on that journey. I'm
Absolutely.
very optimistic about what's ahead. And one last thought, as being an investor, I'm thinking of all the innovation. So when you think about all the businesses that will get listed in the coming years, and some of them might be brewing in some garages or basements, and they're entrepreneurs starting new businesses, at some point they'll be off scale and available to you and I and your audience and my clients on the stock exchange somewhere where we can become owners. I feel like the creative minds that are out there producing new ideas will surprise us in so many wonderful ways. And I think we'll find even more ways to organize our lives and businesses and everything else. And we've seen a huge leap throughout COVID in how we live, work, get educated. So I'm very, very optimistic about the future. And here I am now. I'll get to participate in it. I don't have to be the one that will invent those businesses, but I'll be here.
Yes, we can invest with these people.
Exactly.
Sorry, Bogumil. I'd wrap things up. When's a good time to start investing?
It's like planting a tree. You know that, right?
Absolutely.
You always look outside and you say, I'm grateful somebody planted that tree 20 years ago, and Buffett brings it up. And the second best time is today. So if you haven't started, start now. If you haven't thought about spending less than you make, start now. And celebrate those moments, the milestones. You might have 6 months of your expenses saved. This will change how you live. This will change how you think, how you make decisions, how you even talk to your boss. And then realize that money is a force and it can empower you in so many different ways. And if you see this as an infinite game that has no end, it's a really fascinating, exciting journey. And it can benefit you, your kids, your nieces, nephews, your charities, the whole world around you. It gives you options and freedom. And most of all, it gives you full control over how you spend your time.
It's a good way to end. Bogumil, thanks for your time. Thanks for joining us here at the Motley Fool.
It was my pleasure. Thank you so much. I really appreciate it.